The entire market was just talking about how Kaspa was going to do an absolute rocket to the upside after the jobs data report was filed in December. This exact same monetary policy catalyst is about to be released on Friday. The new jobs data is coming into play. Kaspa has been more affected by monetary policy than any other project on radar. This is because of its ties to Marathon Digital, Wall Street, and the VC firms that are truly driving its car. In the meantime, since action has been to the downside in the large cap altcoins, we found a specific niche that is giving out free money. Some economists are saying we'll be lucky in the scenario that the FOMC doesn't start hiking rates. In fact, it will be a different catalyst, not rate cuts, that are going to be fueling this bull run. A lot of investors were starting to get worried. Kaspa wasn't going to have all their catalysts lined up in time for the market top. In that scenario, that quarter one, early quarter two was the bull market peak. That is not the case whatsoever. All these content creators that were planning to cash out early this year are going to be in for a rude awakening, and we'll explain what quantitative easing, quantitative tightening is, as well as fill you in on the details of the FOMC's plans right now and how this affects market with rock solid proof. Since the Fed's concerned about rising inflation, the altcoin market's been on a sell-off, reaching prior swing highs from the last cycle and then having this dip down to the low. Meanwhile, this is creating excess cash while the VCs and investors are taking capital off the table, prepared for a rocky road ahead. This is causing this project Virtuals. This is right at the end of November, beginning of December at 50 cents. Right now, it's reaching all-time highs as we speak. This is a $4 billion market cap, the host for AI agents. These are meme coins in sheep's clothing. They're listed as meme coins, prepared to take market cap away from the boys clubs, away from all of these JPEGs on chain, when these are actual AI robots that are set to go out and collect capital to raise their own price. It's completely amazing. Look at how much the price has gone up in that brief amount of time. AIXBT, this was at a 300 million market cap. It just recently got up to a 600 million market cap. Game is at 36 cents. Luna's at 16. When we started looking at it, Game was at 13 cents. Luna's at 8.5. Vader was at 3 cents. Convo was at 2. Vader's at 12. Convo's at 7. And this one, AIXCB, is pushing up on 10 cents. We've actually got a specific trading plan just for that agent at 2.5 cents, with an add-on later at Discord at 3.5 cents. These projects aren't just doubling up, they're tripling up, 4xing, 5xing. This is where you're going to find that true 50x bag in the meantime while we wait for the market to recover. Jumping over to the Kaspa chart, because of Kaspa's connections to Wall Street through Marathon Digital, there's a lot of correlation to not just the FOMC meetings, which we can see in this chart. Look at the abnormal upside we get from bullish FOMC meetings, causing this massive green candles. Clearly, this is institutional level traders, not just interested in Kaspa, but they're driving the car. It's the data releases that take place in between each 45-day FOMC meeting that offer even more insight and direction to risk-on assets, specifically Kaspa. On December 6th, they released the jobs report, and we saw massive upside on that as the jobs were weakening. It wasn't until the CPI data started showing there would be high inflation that the market started seeing a sell-off. This was targeted heavily in Kaspa because of its institutional level investing. Inside VIP, one of our printouts is of the full 2025 monetary policy calendar with a key on how to translate each data set as it's coming out, whether it's PCE, CPI or a jobs report. This Friday is the big catalyst. The jobs report's going to be coming out again. Previously, jobs affected Kaspa very bullishly. We can see on the chart the volumes coming up. Volume is everything. This Kraken listing has helped out a lot. We've got the 10 BPS upgrade on the road as well. Looking at some technical analysis, we zooming all the way out to the 1 week chart here. Let's slide in. Very similar to RSI, like a pendulum, it swings up and down. You can see very clearly every time this pendulum has swung to the low, that's a swing low. When it swings to the high, that's a swing high. So we've got a swing low here on October 28th. Then there was an FOMC meeting, sends the price back up to this swing high. And now we've almost hit the absolute bottom of this meter. So very soon, Kaspa's ready on the 1 week chart to create an entropy shift. Not everybody's a fan of technical analysis, but when you combine it with FOMC monetary policy, it's a very powerful tool. Just to underline how important the stochastics can be in charting lows, this is from our trading journal inside VOP. When we were getting our hands on Moonwell at 3 cents, we saw it at 3.5, and we recognized that there'd be a stochastic pullback, giving us the opportunity to purchase this at 3 cents right here on this support line. Everybody in VIP loaded their bags. This is connected to monetary policy on a larger scale. We were plotting to buy this all the way back since July 1st. We had it on a watch list, eyeballing it when it was as low as just 2 cents, knowing it was a strong competitor to banking products like bonds. Therefore, when the FOMC cut rates in September, Moonwell would be a strong winner. This is connecting monetary policy to on-chain dynamics. Once the rates got dropped, Moonwell was now a better place to stash your money, yielding a higher APY. That's why it was a top swing trade coming out of this FOMC meeting. Right now, we're getting tons of cash hands over fist inside this virtuals protocol. And soon it will be time to reap some profits and then roll these into the big projects, specifically Kaspa. This Friday, the discount prices we're looking at right now have a high probability of vanishing forever, as the jobs report released on December 6th last month caused a lot of upside, stirred up all of social media getting ready to jump on Kaspa train until the CPI projections were released, getting the institutional players to back off. A bullish jobs report, which will show weakening data, can push Kaspa back up on top of this blue repeating trend line, the Y-axis, getting us headed in the right direction again. So how's the FOMC going to get the bull market going if they're not even going to cut rates in 2025? Or in the more extreme example, what's going to happen? They start raising rates in 2025. The bull market can still kick off because of the quantitative easing cycle. How's the FOMC going to stimulate the bull run in 2025 without the rate cuts? They do this using the quantitative cycle. This chart right here represents how much assets the feds are keeping on their bond sheet. This is something that they do hand in fist with BlackRock and these big VC market makers. Right now, the FOMC is selling these assets, offloading their books to BlackRock, which is in turn taking liquidity off the street. This is ultimately bearish, but when they take a pause, like right here in February of 2023, look at what happens to the altcoin market. February 2023, off of that pause from selling assets to buying them, taking liquidity off the street to now putting it back on, the total 3 sees a massive bunny hop jumping to the upside. In fact, when you ask your everyday content creator what caused the top of the prior market cycle, they'll say some nonsensical answer about Sam Bankman-Fried or Terra Luna, when what actually happened was there's an FOMC meeting, like right there, where they didn't just change the rates from 0 to 0.25. More importantly, they shifted the quantity quantitative cycle, flipping it from easing into tightening, putting money on the street, and then they turn around and take money off. And the Fed has been doing such a good job offloading their balance sheet. And you'll hear them talk about this in the meetings. And yes, this is something that you need to understand in order to be an effective trader. When Satoshi built Bitcoin, he designed it to work with this monetary policy hand and foot. Notice how the last time we were cutting rates was 4 years ago, parallel with the halving on Bitcoin. That's not a coincidence. And the FOMC isn't working with Bitcoin. Bitcoin is working with the FOMC, knowing how it operates inside and out. So to be a crypto trader, a true black belt, you have to have this tool in your arsenal. Inside VIP, we have loads of PDFs to get you up to speed on how to connect monetary policy to your trading. A great example is while we were waiting for the Fed to start cutting rates, we were getting in on all the top altcoins at the swing low price, knowing they're about to bust it to the upside. More recently, the entire reason that this virtuals AI agents is rocketing to the upside, looking in the past 7 days since we've got on board with it, the upside. Some of these are doing 500%. And we have specific trading plans getting all the guys into these. They're opening their bag and loading cash in right now. And this is also connected to monetary policy. The reason why virtuals is doing so well right now, the VCs, the market makers, don't have their hand on the scale here yet. This is driven by retail right now. As it's starting to get bigger listings, soon the market makers will play more of a hand in it. And of course, this is so early in this entire ecosystem. The upside is going to be immense. For anybody who's investing in meme coins heavily, this is drawing so much capital away from Solana. It's destroying the Solana meme coin ecosystem. We brought that up in yesterday's video. And as more of these launch pads, these AI agents, they're listing them as meme coins. They're not. They're full AI robots that go out and make cash. All your regular meme coins that are just a JPEG on chain with maybe a burn mechanism as well will be destroyed by these. The wind is going to get taken out of their sails. The meme coin market, very finicky, and this is the top dog in the junkyard. January is set to be an action-packed month for monetary policy catalyst, setting the stage for the rest of 2025. There's 4 new board members that just joined the FOMC. Some of them are leaning bullish, the others are leaning bearish. So it's going to be a very pivotal moment right now. Thanks for checking out this video, guys. We'll catch you on the next one.